You're listening to Take a Seat with Gail Newcomb, the show that dives into real conversations about your business, helping you tackle the tips, tricks, and strategies you need to thrive. Every episode, Gail brings in the pros to share their expertise, so pull up a chair, take a seat, and let's talk business.
Welcome to Take a Seat. I'm your host, Gail Newcomb, president of the Women Innovation Group. I'm here with my friend Sharon Hodges, CPA and president of SD Hodges and Associate. Sharon, take a seat. Sharon is the CPA of SD Hodges and Associates PC. Sharon?
Good morning, Gail. Hi, everybody. I'm Sharon Hodges. I am a CPA and have been for 31 years, 35 years in taxes, a lot of years of experience in accounting and taxes. I have my own business, and I'm here today to talk about some very interesting things that people should do at the beginning of the tax year.
So, Sharon will be discussing first quarter strategies for taxes with tax season starting in February. Sharon, you start off with some tips that you can give business owners that will be able to be helpful?
Sure. Initially, at the beginning of the tax year, most people are concerned about getting things done for the last year. But now is a good time to start planning for the coming year. So there's some strategies that people can put in place, some early strategies that if they start now, they can better work 2025 anyway. So we want to start these tax strategies early, and then we can build into making a better year. So this is about early tax strategies.
So, with most business owners, they normally wait until tax seasons to even start gathering information. What would be some of the tips that you can help them with to start off the year right so that as they go forward in the year that it would work better for them?
Okay, so when businesses get started, at the beginning of the year, like I said, they're all concerned about what happened last year, how to get all their paperwork together so they can get their taxes done. However, if you go into the first of the year with some tax strategies in
Mhm.
place, then you can maximize the amount of money you save during the year. So if you're taking a home office deduction because you're a sole proprietor, you want to start working on that stuff at the beginning of the year. So you've got to track your all of the things that you need for that home office deduction. If you're
Okay.
taking mileage, you want to do the same thing. You don't want to wait until the end of the year and now try to recreate all the miles that you've done, that you've driven for the year. You want to start that at the beginning so that you have all that data available and you can maximize that mileage deduction. Reasons to start now. And there's quite a few tax strategies that can start at this time of the year, and it helps throughout the year. So it's not just for sole proprietors. There's all kinds of tax strategies that we can go into.
So I know for me, when I'm doing my taxes, one of the first things that I'm asked about are my financial statement or P&Ls. What would you suggest for, let's say, a startup company? Within Women Innovation Group, we have a lot of companies that are smaller mom and pop companies under $100,000. So what would be your suggestions to them?
My suggestion, if anybody is good with Excel, I would start with an Excel spreadsheet because, I mean, you can go into QuickBooks, but that costs you money. And what I've learned over these vast number of years
Uh-huh.
is that most people want to use QuickBooks because everybody's heard about QuickBooks and they know they can't afford to pay a CPA to do their accounting during the year because they're too new. But an Excel spreadsheet doesn't cost you anything and can keep just as good a track. Most people don't even know how to enter data into QuickBooks. And this isn't knocking QuickBooks, but if you're a very small business, if you have someone help you with a good spreadsheet, that should carry you through for a while until you get to the point where there's so much activity going on that you now need someone to take it over for you. So I would suggest an Excel spreadsheet.
In terms of someone coming to you for the first time, how would they prepare?
If I'm doing their taxes or if they're just meeting
If
with
you're doing their taxes. So let's say you get some referrals through the Women Innovation Group, and so they are interested in coming. They've never had their taxes did by anyone before. They've always did their taxes themselves. So what would be the information that you would need them to come in with?
The information would be 2 years worth of tax returns, whether they prepared them or someone else did, as a baseline to see what's going on. If they've had a business in the past and it's on their tax return, that gives a guideline for what's there. That'll also let me know probably what's missing, because most of the time, small businesses, even if they do their own taxes, if they're sole proprietor, they don't get everything in that, on that tax return. They've missed a lot of deductions. So 2 years worth of tax returns as a baseline to see what's going on, and then whatever, all the tax documents obviously for the current year, but a detailed list of expenses and things for their self-employment business.
All right. As a tax advisor, can you basically outline why business owners should be using a tax advisor?
Well, if your small business is just a side hustle, then you really don't need a tax advisor if you don't intend to grow it into anything. You're just using it for making extra money. But if you want your business to grow, you may not need a CPA for doing all of your accounting during the year because you're not big enough. But you would want to talk to a tax advisor so that you can find out what kinds of things you need to keep track of that you're not keeping track of now. So, like I said, most small businesses who do their own paperwork, they miss a lot of things because they just don't know. So, when somebody comes to me brand new, if they're not bit large enough to, or they're not making enough money to afford my services on an ongoing monthly basis, then I give them a worksheet. Keep track of these things.
Okay.
And then if they like, then they can pay a fee and then have access to me for questions, but not as costly as me doing monthly accounting and all of those other things for them. So you don't always have to, if you're seeing a CPA, you don't always have to have the full complement of services.
That's interesting. When you look at, it's so intimidating for business owners, of course, when they're even looking at using either a bookkeeper or a CPA or accountant. Can you outline what makes the difference and why they need to use a bookkeeper versus a CPA or a regular accountant?
Well, actually, you don't have to use a CPA.
Hmm.
We go through a whole lot of additional education that a bookkeeper and an accountant don't go through in order to have those credentials and to maintain our education. But if you have a good bookkeeper, they can keep track of your accounting for you. And of course, they're not nearly as expensive as having a CPA firm do your bookkeeping and accounting for you. Um, a good accountant would do financial statements probably very similar to the way that we do them, because that's how what they're trained to do as well. So it's when you get into the more advanced things that you would want to consider having a CPA. If you're looking for projections, if you're looking to help grow your company, if you're looking for any sort of tax savings, advanced tax strategies, someone who is very skilled in that area, that's when you want someone who has, I don't want to say a higher level of education, but who goes a lot deeper into those areas and has an expertise in those areas. So you don't have to have a CPA to do your monthly accounting. As a CPA firm, as an accounting firm that we are, I
Yes.
have bookkeepers who handle part of that for me. So there's still bookkeepers working on your work, but then I do the final look through to make sure that everything is correct. So you don't always have to have one. It's
So, what would be your suggestions though with that? Because I know for myself as a small business owner, when I first got started, I couldn't afford a CPA. So
right.
I was doing a lot of the work myself, and I did have a what do they call those things? Outreach, no, Excel spreadsheet.
Hmm.
So, and it was helpful. But as you're growing and you want to go after business loans or you want to look at taking investors, what would be
Then
your
you need
suggestion? So I guess I'm asking for a outline of how they should be doing this as that's your expertise.
whenever you start going after money, then you really do need, if you don't have in-house CPA, then you need one. Because anybody who's going to loan a company money is going to want a set of financials that an accountant has signed off on, not just something that you pull up out of your QuickBooks. They're going to want a set of financials an accountant has signed off on. And if you don't have an in-house accountant to sign off on those, then you need a CPA at that point. Investors, they want to know that a CPA has looked at your stuff or done your stuff, your paperwork. Um, so if you're going after investors, if you're going after money, if you're looking to buy buildings, if you want to acquire other businesses, once you get into that space where significant money is involved, then you definitely want to deal with a CPA.
Okay. So when we're looking at first quarter strategies, this is the first quarter.
Hmm.
Can you outline a full description for a business owner?
Well, probably not a full description because there's a lot of tax strategies out there.
Okay.
And they also depend on the size of your company. So if you're a sole proprietor and your company isn't very large, or I mean, it doesn't have, if your company doesn't have a lot of like employees or a lot of moving parts, all of the strategies won't work for you. But the main ones for sole proprietors are home office deductions. So your business office, mileage deductions. You can do 401, not a 401k, but you can do a simple IRA and those kinds of things. So setting money aside for your retirement. And the reason to start early with that is, like I said earlier, so for home office deduction, you've got to track the utilities that you pay and all of those things, and those that starts at the beginning of the year. And if it's mileage and you take mileage, then you've got to track that for the whole year. So you don't want to try to recreate those records at the end of the year because you didn't do them. So if you start now, then you know that you're catching all of those things, you're not missing anything and leaving money on the table for the IRS. And then also, if you're making your retirement contributions, that reduces your tax liability to the IRS as well. So you don't want to wait until the end of the year and like, oh my gosh, now I need to make this IRA contribution and I don't have the money. But if you were making
I'm sorry, you do consider then doing that quarterly, making those deposits quarterly for your
for
retirement, for the what
you can
ARA?
you can make them quarterly, you can make them monthly. Sometimes
Oh,
it's
wow, okay.
easier to take that as a small chunk, and your $500 or your $200 a month is a little bit easier to handle than $1,500 on a quarter,
Okay.
especially with small businesses because the income isn't always even. It's not always equal every month of the year. So if you start early and you make those contributions, I made some this month, I've made some next month. At the end of the year, you may have made all that you could make, but it didn't hurt because it wasn't that $8,000 check on December 20th when you forgot to buy all your Christmas presents. So
Okay.
you want to space those out because it's about cash flow. If you start early, you can manage your cash flow and still get the things done that you need instead of waiting till the last quarter and now you have all these things that you have to do. They're going to cost you some money, like your retirement is going to save you tax dollars, but now you don't have the money to do it because you didn't plan for it.
Got you. Now, I know I jumped right into asking questions, and I didn't really give you a chance to talk about your background as a CPA. And I think that is needed. So I want to kind of double back and talk about Sharon Hodges and how did you become a CPA and how did you get your expertise in that area?
Well, I started a little late in school, so I did go to college. But back when I graduated from school, you could sit for the CPA exam without having a master's degree. You just had to have a whole bunch of college credit hours. So I actually passed the CPA exam before I finished my college degree. You can't do that now. So, but I did that. So that's one of the few things I'm really proud of is the fact that I wasn't even done
Awesome.
with
Yeah, that
school.
is awesome. I didn't know that about you, Sharon. I did not know that about you. So I know you have over 35 years of experience as a CPA.
No,
And
no,
you
no, no. 35 years in taxes,
in tax.
31 years as a CPA. So I
Okay,
was
so
a tax
35 years in
professional.
taxes and 31 years as a CPA.
Yeah, I was a tax professional while I was going to school as well to finish up to get my CPA.
All
Um,
right. So, as you're giving this advice to business owners in terms of looking at their quarterly taxes and taking the first quarter, taking one step at a time, is coming from years of experience. Do you have some examples of? I know you can't give people names or companies, but do you have examples of what not to do?
there's loads of examples about what not to do. Um, and I do. I've dealt with a lot of clients who don't want to deal with their estimates. They don't want to pay anybody, or they don't want to do their own financials, and so they don't know what they've made over the course of the year. Because you can always have an idea of what you've made,
Mhm.
but until the numbers are actually down there, you might be close on what you made, but you have no clue about what you actually spent. And so a
Yeah.
lot of people end up spending their business money, and they think they spent it on business activities and they didn't. So at the end of the year when they have no money, they think they it was all business, and so their business didn't make any money. And then you do their taxes and they find out they owe $12,000 in taxes because all the money they spent wasn't all business expenses. But they didn't know that because they weren't keeping a good enough track. So now they have a $12,000 tax bill, but if they've been doing quarterly taxes, they would have paid three, 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 and three. And that's a lot easier to do, plus no penalties or interest, than to pay $12,000 plus
So that
penalties and
yeah,
interest.
so that expense report that you talk about, just doing a Excel spreadsheet, it's
Yeah.
gonna be very needed in that. Um, I do realize that, in terms of, doing your taxes, and typically when the IRS, tax season is what this year? I'm sorry. What time does tax season start this year? Have they
Well,
announced yet?
it's already open for corporations, and then it opens on the 27th for individuals.
All right. So when you're looking at, I really want to stay focused on the business perspective of this because I get so many people that we get in terms of not understanding that they have to do their taxes at a certain time of the year, that they have to do them every year. I know that's a big deal with business owners who first get started. They don't realize that they got to do taxes every year. Are there some suggestions you can give there? I've had people come to me and they haven't did taxes in 3 years, and they've been in business for 3 years. And yeah, so what's your suggestions?
You know, once you're at that point, I mean, it's already too late for you as far as starting right from the beginning.
Okay.
But for any brand new business person, even if you can't afford a CPA for your new business once you get started because it's new, you should have a consultation with one before you start your business. Because same as having consultation with an attorney to make sure that you're doing the right things as well. But if you pay for a consultation with a CPA before you start your business, they will tell you the kinds of things you need to keep track of. Even if you can't afford them to do it for you, they can give you some guidance. And then at least you'll know, okay, I've got to do these particular taxes every year. If you have a boutique, then you know that you'll know that you have to do sales tax.
Okay. What is your suggestion for our beauty industry people? A lot of them are in a situation where they are DBA. They just DBA their companies. Some of them don't even use a EIN number.
Uh,
So, what would be your suggestion in cleaning up, preparing as we're getting into this tax season? A lot of them don't want to claim the money. So, what's your
you
suggestion?
know what? if you don't want to claim it and you're dealing in a business that's mostly cash, there's nothing I can do for you. I have found dealing with people in the beauty industry, and I have dealt with a lot of them over
Mhm.
the years, is when they need to buy something that they realize that they're going to have to report income. You can't get a house. You can't buy sometimes now you can't even buy a car unless you can show you can actually pay for it. So if we want to talk about what the IRS wants, we know what they want. They want you to report all of your income, cash, and any way that you take it in.
Okay.
And of course, pay the tax on that. And that's what you're supposed to do. According to our laws, that's what you're supposed to do. But if you're not going to do it, I mean, I can't make somebody do that. I tell them all, this is what you need to do. I
So
mean,
I, no, I'm sorry, go ahead.
no, I get paid cash sometimes, which is odd actually, but I do. And so, we record it and we report it because I know that I have to. And I mean, it's not a lot for me, but still, it's in order for my business to go forward in a correct way, I need to do those things. So I do those things.
So I brought that up because, in 2020, we had a devastation. COVID hit America and the world. And I had clients come to me in the beauty industry by droves. And due to the fact that they didn't file taxes, didn't keep records, they weren't able to get any assistance when the PPE started and even some of the loans that the federal government.
Hmm. Yeah.
So one of the things I wanted to do is to make sure that they get educated. So I wanted to use this podcast as a chance, as what us talking to you, a chance for that industry to understand why they need to do reporting, do it quarterly, and also have, if not a bookkeeper or accountant, someone that's accountable for them. You're correct, because I know for the most part, they won't be able to buy anything. I had a client who did file, did do it 2 years prior, and he actually, during the COVID situation, was able to buy a home and get a business, a building for his business due to the monies that he was able to get. So, yeah.
I find that a lot of people who deal in cash have a really hard time wanting to report that
Mhm.
cash. They don't put it in the bank. And I don't know if you've noticed for yourself, but usually when people carry cash on them, they don't pay attention to how they spend it.
They don't. I agree. I agree. I know for me, I don't carry cash anymore. I use one credit card for the business, and all the expenses are on that business. And I have a personal credit card for me, personal, so
Yep.
that I don't mix the two.
Yeah. So when you're dealing in cash and I mean, if think about it, if you're really good as hair, just say you braid hair and you're really good at it, chances are good that you're going to bring in 70, $80,000. If you're accepting cash, do you really want to report the taxes on that? Because the tax on that is going to be steep, as if because if you were at a job making 80,000. So that's where it comes in, where people don't want to do it because that tax bill is going to be high. But and I don't know whether anybody believes Social Security is still going to be in existence or not. We don't
Yeah,
know, but
we have our questions on that. Yeah.
you're not paying into Social Security.
Mhm.
So for this platform, we're just going to assume it's going to exist when you retire. So you're not going to get any money from that. You're not going to get any money from that. You're not paying any taxes, so you're not going to get any unemployment if all of a sudden something goes wrong and you can't work. If you braid hair and that's how you make all your money, and you end up with really bad carpal tunnel or arthritis and you can't use your hands anymore, you can't even apply for Social Security disability because you've never paid into those things. So you're yeah, I mean, I understand nobody wants to pay taxes. I get that. If we all had our way, we wouldn't. We'd still want the government to do everything for us and not pay taxes, but we can't do that. But you're limiting all of the other options you have for some sort of assistance from the government if you don't participate in these activities, which is, paying your taxes.
So, question then. So, do you have some pros? We talked about the cons. What are some of the pros for? And I want to stick to that industry just because we do a lot of business in that industry with Women Innovation Group. I also know, and we did mention this, that now that the federal government has all of the banks, all of the cash app companies reporting directly to the federal government what these industries make. What are some of the pros for them that they will get by doing their taxes?
Well, they'll be, they can be able to purchase a home if they want to. You can't buy a house for cash anymore. If you're buying a house and you actually have the money and you don't need a loan,
Okay.
you have to prove how that money got into existence.
I
It
did
has
not
to
know
go,
that. I did know that.
go through a bank account.
Yeah.
So if I take $100,000 of cash and put it in the bank today, and next week I want to go buy a house for $100,000, they won't sell it to me. I have to prove where that $100,000 came from in order for them to consider it legitimate money for me to buy a house. Now, you can probably still take money and go buy a car for cash, just write a check, but it's still going to have to, they're not going to let you walk in with a bag of cash and buy a car. So the government is limiting what we can do with cash. So it has to look like it's come from a legitimate source. If your tax returns show that you've made $20,000 a year for the last 15 years and you go with $100,000 to buy this house, you couldn't have lived off of that $20,000 and saved this $100,000 without something different happening. Where did this money come from? And if you say, oh, my uncle gave it to me as a gift, they want your uncle's information and proof that he actually had that money to give you. So you can't just do things with cash like you used to in this country. So that's a pro for them actually reporting income because it allows them to have the money trail to show that they can do whatever these high ticket items are that they're trying to do.
Yeah, I think sometimes people don't realize how important it is to understand the tax laws or at least the basics of the tax laws. Yes, as a business owner, you may not understand everything. I know myself, you are, well, I didn't say this, but Sharon Hodges is actually my CPA. So I know when I first got started with you, you had me actually just start off with the simple Excel spreadsheet,
Mhm.
and it's been very helpful. It made me realize how much waste that I spent as well as where my money needed to go. But one of the things it also made me do was to understand that I had to start putting away money for my in savings as well as for retirement. And so I want to make sure that that gets across. It's very important to me that we're able to make a difference. I don't want it to be where people, well, she's just saying what everybody else is saying. But in actuality, we want to make sure people understand why you're saying what you're saying and why they need to do it. And so I know we spend a lot of time on a specific industry. And like I said, the beauty industry is $1 trillion industry, whether it's nails, whether it's hair, whether it's makeup, it is trillions of dollars are spent in this industry. And it's an industry that has been under the radar for so long. And so many of the people who are in that industry, you're right, they're never able to buy homes. Yeah, you can buy a car, but they're never able to buy anything. And I've met so many people in their older years looking to work at Walmart's or Target to just make ends meet because you're right, they now can't use their hands or they have bad eyesight, so they can't be a nail technician. So it's so important that they are filing their taxes because, yes, we don't know where the system might be, but right now we have a system in this country where if you pay into it, you're going to get something out of it.
Right.
And that's
And
the most important thing. Yeah.
as far as paying into retirement,
Mhm.
you can't pay into retirement if you don't have income. So you can't open an IRA account with and put $8,000 in it, and your tax return shows that you only made $3,000. You can't, and you'll be fined if you leave that money there. So you have to have taxable recorded income in order to save in a retirement account. Now, you can save money all you want, but you can't save
Right,
it
in
in
a
a
taxable way.
retirement account
Mhm.
without having taxable income.
So I know we didn't talk about this in terms of a C corp versus a S corp versus a DBA. Which do you think will be a better, and just not even thinking about a small business, but in general, for someone to get the max out of being a business owner, whether a small new start business or a successful business making over 1 million a year, which tax bracket do you feel would be the best for someone to look at going into?
Well, it's really is an income thing. So unless you've already got contracts and you're starting your business because you have contracts, or or you've gotten a grant, or if you have a significant amount of money coming in, or you're going to, like, say this is, you did this particular job for someone as an employee, and now you're transitioning to a contractor, and you still have access to all of those businesses you did business with as an employee. You're starting a new business that's going to make you money. It's not like starting a small boutique where you're selling some clothes and you don't know how it's going to work. You're getting ready to transition into a business that's probably going to make you more money than you earned in wages. You might want to start out as a corporation, as an S corporation. But if you're coming into a business and you're trying it out, and you suspect that you're going to make some decent money, but you're not sure, you may want to start as an LLC. And once you hit a certain income, then the benefits of being an S corporation or a corporation happen. Then it's an income thing usually, because of the cost of, there's more cost to being a corporation or an S than there is to being a sole proprietor, but then you have way more tax benefits once you change. So it's usually an income thing, and I found for most small businesses
Okay.
that once they start getting to that $100,000 mark,
Mhm.
then the cost of being an S corporation are less than the costs of remaining a sole proprietor. And it's usually taxes. So there's a time to switch, but you need to really talk to a tax professional, or someone who's, a professional in that field, about when is a good time for your business to switch over.
So, do you give consulting time if someone comes in? Do
Absolutely.
you do those type of
Mhm.
meetings?
I do.
I do. So, in terms of, I know when you were saying it might be better to switch over to S from a DBA once some substantial money come in. Um, Without saying a company name, I have a few clients who actually are over $10 million and they're still at a S corp. Are there pros and cons to that as well? I
Well, there can be, de- depending on the number of owners. I don't know if it's just one owner.
It's just one owner. This person is just one owner. Family owned company, very successful company.
Yeah, there's still, because the reason to stay an S corporation is because you can have money that's taxed differently than if you're a corporation. So if you're a corporation and you own it, you're the sole owner of a corporation, you can take wages and you can take dividends. That's the only way you're supposed to get money out of a corporation. So your wages are fully taxed, Social Security, Medicare,
Mhm.
all of that.
Yes,
But dividends are taxed to the corporation and they're taxed to the person who's
the
received.
individual.
So they're taxed twice. So there's a high level of tax involved in that. But if you're an S corporation, you have your wages and then you can have your draws. So draws are taxed at a lesser amount than wages are taxed. So there's a reason to be that.
I also know that you had shared with me a few years back that as a LLC, you could, at the end of the year, if it's so much money more, you can dump some of that money into some type of Roth.
Yes.
Yeah.
So if you're a single member LLC, you're still considered a sole proprietor for tax purposes. So you're allowed to put money into um, a retirement account, it's basically 25% of your net income after expenses. So let's just say your business made $100,000. You had $50,000 worth of expenses. So 25% of that 50,000 that's income,
Right.
you can put into one if you choose to.
And that really would save the client a lot of money, that business owner a lot of money. And also, that's money that won't be taxed that year, correct?
Right. So
So,
it saves you on not being taxable, and it also saves you on the dollars you have to pay tax on, and you're setting it aside for your retirement.
all right. And so I want to get back into that first quarter strategy. Um, do you have any other suggestions for clients, for business owners at any level for their first quarter and why they should come to SD Hodges and Associates?
Well, there's
We know you're fabulous, Sharon. We know you're fabulous.
there's if you're a corporation, so the three that I talked about earlier are more for sole proprietors. But if you're a corporation or an S corporation, there's also strategies for you as well.
Mhm.
You can offer employee benefits if you have employees. And even if you and your spouse are the owners of the company, you're the only employees, you can still pay for the benefits through the business. So you can have benefits for your employees. You can obviously put into your retirement as well, and the retirement for your employees. So you can, but the main part about
Yeah,
starting this early is to manage cash flow and know that you're maximizing what you can for at each quarter, so that you don't lose out on these benefits. You can't, you can't say, okay, I'm going to pay for health insurance or part of health insurance for my employees and
mhm,
then wait until the end of the year and try to pay that bill. You're not going to be able to pay that bill. And there's record keeping that has to go into play when you do these things. So if you start late, you're going to miss out on the record keeping that's necessary, the reports that have to be filed. So there's a lot of stuff involved, but you can save your company a lot of tax dollars, and of course yourself, and benefit your employees. Even if you and your spouse or whatever, you and your kids or whatever are the only employees, there's benefits there for doing it consistently and evenly throughout the year.
right. And you didn't, so why will they come to you to get this done?
Well, because I know all about this stuff. This is unfortunately well, no, not unfortunately. I love this stuff, and this is what I live for. And there's nothing that I want more than to help a business succeed. That makes what I do way more enjoyable. And I love what I do. But when I can help a business get on the right track and succeed, it's just so much easier for them to go forward. They can grow, they can not grow. I mean, there's all kinds of things that you can do when you know what's actually going on in your business all the time. And I mean, that's what I do. That's what I love. I've been doing this now for so long, and I still like doing it. So, and I'm good at it. So I mean, I am
Will say you are. I want to do I guess share with people that Sharon's you've been my CPA now for about 12 years.
10.
10 years. Oh, you said that like I don't know. Okay. Okay, you've been my CPA for 10 years. And I shared with you that before I started using you, I never referred my clients to my CPA. Not because my CPA wasn't good. It was a little bit intrusive. You felt like, no, that's my CPA. But your work ethic, your integrity, and how you have done it, I've actually referred every client since I've met you that I've gotten to you. So that's something for you guys to know. Sharon's a great CPA. She's in the south suburb of Illinois, and she has startup businesses as well as multi-million dollar businesses. So you'll find a great home there. It is a little nice little boutique CPA office. So yes, it's a great office. Do you have anything else to give our audience?
Well, I would strongly suggest that if you've never done it before
Mhm.
as a business, try starting now with the current year, keeping records now, not waiting. Try adding maybe an hour to your week where you actually manage the records for the week.
Okay.
And you'll see how much easier it is going forward. You'll also realize, you can look at that and realize where you're actually spending your money. Because I can't tell you, I've so many clients. I can't say 100% because I actually have two really good ones, but probably about
Are
98,
they the two I sent you? Are
probably
they two that I sent you? I hope so.
about 98% of the clients don't realize that where they're spending their money, and that a lot of it isn't business related. They're assuming that because it's, they thought it, I heard I could take this
Mhm.
deduction, and they can't. And so they don't even know that, yeah, that's not a business deduction. And they don't know where they're spending their money, and they get to the end of the year and they find out, what do you mean $350,000 went through my business and I've got $15,000 in the bank? I don't know where that money went. You need to know where your money's going.
Yeah.
So my
Wow.
suggestion would be, try it. Start now. My little call to action is, start now, keeping track of your information, and just try to do it regularly for this year, and you'll be amazed at what you know. Now you might not spend any differently, but
Okay.
you'll know where you spent it. And that's important. We need to know where we're spending our money.
Thank you. So I want to thank you for being a part of our first show. It was a little rocky. We'll be getting better as time go on. Take the Seat. We're going to have various hosts to host Take the Seat throughout the year. Take the Seat is produced by Onyx Media Live. We want to thank them for all the things that they've done to make this first broadcast happen. And we hope to see you again soon. Thank you.
And thank you, Gail, for having me on as your very first.
I know, and thank you for taking the first seat.